So you've seen the national headlines that the real estate market is slipping, and you're probably curious how that impacts your home in Massachusetts. Have buyers left the market? Are prices going down? And what does this mean for you? To understand some of this, it's important to take a look at the market data for the greater Boston area this year so far. Then we can discuss what might be changing in the months ahead and answer some of those important questions. I'm John Lynch with Dwell360 Real Estate with over 18 years of experience in real estate and the co-founder of our boutique real estate brokerage, Dwell360. Now let's take a look at that data. For the purposes of this update, we're going to take a look at the listings and sales data from 64 towns in the greater Boston real estate market. Those towns make up the territory that the Greater Boston Association of Realtors oversees and where Dwell360 does most of our business. If you're looking for data not seen here today, please let us know and we'll be happy to send you the appropriate report. Let's start by looking at the inventory. Since the beginning of 2020, the housing market has had a shortage of inventory, in particular single-family homes. They have been the most sought after property on the market as opposed to multifamilies or condos. The demand had outpaced the supply in our area significantly. Here's a look at the number of homes sold in the greater Boston area over the last 5 years. You can see the rise in sales every summer. These are the closings after the spring market, the busiest season in real estate. In August 2022, only 1,454 single-family homes closed, a 7% decline in the units sold when compared to 2021. And that was the lowest sales volume for August since 2011 for single-family homes. The number of single-family homes sold year to date was 8,664 by the end of August, and that was down by over 10% from last year. Condos showed an even larger decline with just 994 units sold in this August, and that was a 25% drop in the units sold compared to 2021, and the fewest condos sold in August since 2010. Year-to-date sales for condos were 7,904, and that was over a 17% decline in the units sold. Was this due to the lower buyer demand or a lack of inventory? And that is a big question that we're asking right now. To help answer that question, we can look at active listings. We can see when we look at the active listings since 2018, the overall supply of homes on the market has been declining, especially for single-family homes. In fact, where the market used to show more active single-family listings on the market, now, since the pandemic, we can see that there are more condos active on the market and less single-family homes. This highlights if you were looking to buy a single-family home, it was slim pickings, and it still is slim pickings. We have seen buyers that have been feeling that way for quite some time. And even though the supply of condos has recently declined, we're starting to see signs that the condo market is getting a bit more favorable for buyers. This decline in inventory is clearly reflected in the months of supply that's on the market or available. At the end of August, there was only 1 month's supply of single-family homes and 1.7 months supply of condos on the market. This low inventory for the past 2 years has created a strong seller's market with fierce competition, bidding wars, and rapidly escalating prices. You can see how that's played out with the average sale price. You can see how dramatically the average sale price of the single-family homes and condos have risen since the pandemic began in 2020. Over the last 5 years, we've seen the average price of single-family homes in our geographic territory increase an astonishing 38.4% to over $1 million. This year, those homes spent an average of only 24 days on the market, and they closed for 6% more than their list price. Condo prices have seen a less dramatic but still significant price increase of 20% over the last 5 years to reach an average sale price of over $841,000 in the metro Boston area that we're looking at. They spent an average of 37 days on the market and closed for 2% higher than the listing price. And for owners and homeowners with property to sell, this has been a huge windfall. If you want to make a move and you were able to take advantage of this, very robust time, we saw huge premiums assigned to different properties, especially single-family homes. But we also know that this growth comes at a price. The increase of home prices and the competition make it difficult for new buyers to enter the market. Those buyers are now being crunched by the rising mortgage interest rates. With the fluctuations in all sectors and the rising interest rates, demand has started to shift this September. For well-priced homes, primarily single-family homes, there are still plenty of buyers looking to buy a home in our area. We have been involved in several circumstances in the last month, namely in September and part of October, where the properties that we are seeing that are well-staged, well-positioned in the market are seeing multiple offers. It's not near the extreme level as this prior spring, as today's buyers know the pricing is at a premium and the market is shifting, so they're very careful. And sellers that overprice their homes or the condition is not as good for their homes are feeling the effects of the cautious buyers, and that is the place in the market that we are seeing price changes. So let's review some of those questions we asked at the beginning of the video. Have buyers left the market? In fact, they have. Quite a number of buyers have left the buyer market, looking for their new home, primarily due to mortgage interest rates. The interest rates have gone up, and so as they had started looking for properties, what they can afford or what they were looking at for potential payments when they first started looking has gone up significantly. So it has taken some of those people off the market. The other reason we're seeing people leaving, the buyer market is due to buyer fatigue. Quite a few of them had made offers multiple times and did not get properties and are still even going through that now with interest rates up. And they have gotten some fatigue and they're taking a break, waiting for the market to kind of, make its move and see if there's any changes down on the horizon. Are prices going down? Well, at the moment, we're not seeing any sign of prices going down. The inventory is coming off the market. A number of buyers are leaving the market, but as a result, there still is demand for listings, for properties, and people are still getting very strong prices. And never mind that, in comparison to 2 years ago, these prices are excellent. And maybe the prices as we're looking forward in the future are going to remain flat, but they're very historically strong numbers. And so even if we did see a decline in values, which we are not seeing that as of yet, then we would certainly want to keep that in context to what's happened in the last 2 years. And what does this all mean for you? Well, if you're not buying or selling a home anytime soon, it doesn't mean much. Really, ultimately, the value of your home has gone up in the last 2 years pretty dramatically, more significant than you've seen it in the past. And in the metro Boston area, that there are a lot of people seeking homes, probably similar to yours in the metro area, and investment properties, are also performing very well. It really only matters when we're looking at values on what they're going to do in the future, whether you either have to refinance your home or whether you're going to buy or sell a home. And for most people, it really comes down to making decisions that are relevant at the time that you have to make those and are within financial capabilities of what you're able to do based on today's numbers and activity. We're certainly seeing a lot of people continue to transact properties, but they are often for different reasons than they've been about 6 months ago or so. So that's going to continue, and we'll continue to follow the trends closely, and we'll update you in later videos. But it's important to also understand that the economic stability for The greater Boston area will protect our home's values from experiencing the big swings that other parts of the country may see. It is historically a more stable real estate and less volatile market than most of the other areas or most of the other parts of the country that are making the news. So stay tuned as we'll track these changes and share them with you in additional videos in the future and help you if they affect you as a buyer or seller. I'm John Lynch with Dwell360 Real Estate, and reach out to us anytime with questions about a specific property or to talk about accomplishing your real estate goals.